what's your take on the headline numbers here? You know, beating forecasts for the current quarter, but not for what's to come.
Yeah, you know, I think I may come off as very contrarian, but I almost didn't care what Netflix reported in terms of Q1, and their guidance for Q2, I think, is somewhat irrelevant as well in terms of the long-term outlook. Really, I think Netflix is facing huge headwinds when, you know, Apple Plus and Disney Plus, as well as all the massive growth that we're seeing across free ad-supported over-the-top and connected TV solutions come in. So I think Q4 of this year is when, you know, they'll for the first time truly have real direct head-to-head competition, and I think it's going to be a challenge for them.
Mariann, you're an investor in Netflix. Do you care?
Yeah, I care, and the way I see it is you're going to have some competition from Apple, but we really don't know what it is. What they told us was very, very slim. And when it comes to Disney, I think that they can coexist with Netflix. I don't think the parents are going to be watching Disney after 8:30 at night. That's just not the history of computers in general and cable TV in particular. So those two together would still be under $20 a month, and I think that's something that they can very much coexist with.
So I sat down with Bob Iger, the CEO of Disney, when they unveiled Disney Plus, and he talked about why he thinks the details of this service will be competition for Netflix and all the rest. Take a listen.
Making them available on a new technology platform, that is simply more modern and I think growing in popularity at a price that makes sense with a user interface that's beautiful. I think that's why we feel confident.
So he's talking about the entire Disney vault, animated classics going back decades, as well as new original content. Andre, do you think customers are going to pay for that and Netflix?
I think, you know, people like me that could, you know, don't even look at their bill can when it comes to that, but there's a lot of Americans that can't afford to and will prioritize. I think some of the things that, you know, if we look at this as just kind of common sense, you know, in what business could you, of any industry, could you lose your best-selling product or some of your most valuable products to the business right next to you, and then they undercut you on price and it doesn't impact you? I think the other thing that a lot of people aren't realizing is that the real growth over connected TV over the last 24 months has been in ad-supported solutions like Pluto TV, in Xumo, and others. And what Netflix benefited from for years was kind of being the de facto standard across over-the-top and connected TV. If you bought a new smart TV, or you bought a Roku, or you bought a Fire Stick, you had to get Netflix, or else what was the purpose of having that device? But now what people are seeing across, you know, 30, 35, 40 million homes is you buy those new devices and you turn on something free with ads, and then you can be very selective about how you add on top of that. And for any home, you know, that has a child, if you're prioritizing budget, do you prioritize Disney's whole content library or the content that Netflix has? And it's not really just children. It's the Avengers library and all the other things, as well as competition coming from Warner and then Apple. There's just so much. Netflix has never had to face so much direct competition. And where people are lowering prices, they're going to be increasing them. It's just, you know, I just can't find a metric by which it's not a concern.
Disney's got the Star Wars library going for it as well. That said, Netflix is, you know, it's got first mover advantage. Mariann, are you concerned about the forecast here? The price increase is slowing subscriber growth at the same time that for the first time ever there could be real direct competition.
Actually, I would say now is a great time to be raising prices because the unemployment rate is so low, the participation rate is so high, the wage growth is improving, and if you're going to take a price increase, now's the time to take it. And if it's $1 or $2 a month, I don't think that's going to crush anybody's budget. And as I look out at the Netflix situation, they're growing very strongly overseas. They leverage the heck out of their content by dubbing or subtitles back and forth. So now things made in India will be shown here, either subtitles or dubbed. And I think there's just a ton of leverage to be had out of the system. So we're very positive on Netflix.
So how do you explain what happened with the stock today? I mean, shares plunged 9% right after the results, and now they've stabilized. What happened there?
Well, you're asking me?
Yep.
All right. What happened is people did not read through, and one of the things they did not read through was the beat on subscribers in both the U.S. and overseas. And when you look at that guidance for the coming quarter of 5 million, that is right in line with the consensus numbers that we've seen. So it didn't knock the cover off the ball, but it was in line. I think people, too, have to think back to the management guidance in recent years, which has been conservative. They now have that, more common attitude of we're going to guide down and then we're going to beat. And this has been more frequent in their situation. So we expect them to beat next quarter as well.
Andre, Netflix is surely competing with companies with big budgets. Of course, Apple has $250 billion in cash, but they're investing multi-billions of dollars in original content over the next few years. Can they spend their way ahead of the competition?
I mean, Netflix has had a huge head start in terms of investing heavily in content. I think more so, they're not going to spend their way out of this because you can't spend more than these other companies if they decide that they really want to dig in as well. I think there are some opportunities that Netflix could take advantage of because they've been spending billions and billions of dollars for several years now. Some of that content that's older, they could make ad-supported. A lot of people have talked about that happening. I think that, that's more of a reality going into 2020 if I were them. I do think that is a way they may go, but I think people are underestimating or overestimating the loyalty that people have to Netflix or any content in particular. The churn rate is much higher across households that don't have a child across any OTT subscription service than ones that don't. And so, there's a lot of things that I think would be concerning, regardless of what their numbers are for Q1 or Q2.